The COVID-19 pandemic changed life as we know it. At first, we thought many of these changes were temporary, but time has shown that some things, like working remotely, are here to stay. This is also true in the world of finance. Now, during the pandemic, with more free time at hand and income from traditional sources quite thin, several people turned to the financial markets to see if they could make a profit. This led to the creation of online communities around certain stocks. These communities, informal collectives of retail investors, soon discovered that if they moved en masse, they could impact the markets just like any big investment bank or even mighty hedge fund. Victor Aluyi, Senior Vice President and Head Investment Sankore Global, joins me now to discuss the impact of this phenomenon on the markets, meme stocks. Victor, if you forgive my ignorance on this, when I first heard meme stocks, I thought that people were taking memes from social media and somehow making money with them in the stock market, but it really is not that. It's not about these funny images or visuals that we all share. So give us a background. What exactly is a meme stock?
Well, so this phenomenon became a bit more popular, obviously, like you highlighted in your background, during the thick of the COVID pandemic. You essentially had, lockdowns where people were basically, bogged down at home. And then if you look at what had happened in the advanced economies, particularly in the US, where people were receiving stimulus checks, it then created a situation where people felt they need to try out their hands, in the equities markets. And that then created some sort of frenzy where, on different online forums, people were giving their opinions about certain stocks. And it created a situation where people would, create a lot of buzz about a particular stock and then going on that stock. A very famous example was the GameStop situation. And I think the idea, again, for people was to sort of democratize the entire investing climate, right? The people had heard about this situation where, a hedge fund could actually short a stock and then essentially destroy the company. And this was the GameStop situation. And on that Reddit forum, what people basically did was to go long that stock, buy that stock. And then it created a short squeeze, for particularly that hedge fund manager. They lost about $6.5 billion. It took that hedge fund manager down. And I think that individual or retail investors felt very empowered by that situation. So on the back of that, we then had a frenzy where on those forums, people can have a conversation about a particular stock, and then they go on en masse to sort of buy it because they felt left out in the market. Recall, the market in the US is very deep and has been an exclusive preserve of, deep pocket,
Yes.
high net worth individuals and institutional investors. So retail investors felt left out, and the meme stock phenomenon sort of empowered them, created some sort of democratization for the investment world, and they took advantage of that. It's pretty much akin to what you might refer to as, in some instances, a pump and dump, scheme where people have a buzz about a particular stock, they go in, they buy it, it rises very strongly, and then they sell, and they can do it the other way as well. So I think it's a phenomenon that retail investors felt empowered and very powerful about, and they basically just took advantage of it, really.
All right, so let's tell people a bit more about the GameStop situation. So over the course of a few months, retail investors bought the company's stock with such fervor that the price went up 100 times. On the 11th of September 2020, its price was $1.52, and by January 29th, 2021, shares were worth $81.21. Millionaires were made. But Victor, my question here, with this meme phenomenon, it's obviously distorting the true price or the true value of these stocks. Is that not an issue, particularly if we refer back to the GameStop situation? Was the GameStop stock worth $81.52 at the height?
No, it certainly wasn't worth it. And obviously the market has pretty much repriced it. I mean, the market has a mechanism for essentially revealing those prices over time. So regardless of the buzz that goes on to probably pump a particular stock, regardless of the hype around a particular stock, the market always has a way over time of actually repricing that stock and reflecting its true value. So clearly, I mean, GameStop certainly wasn't worth that amount. But like I said earlier, I think it was just a way for retail investors to feel sort of empowered, and it took out quite some illustrious fund managers that are, bet against the stock, so to speak. So, they lost a lot of money while people made money. And this phenomenon typically is always like a fad. It really isn't sustainable where they create trends that are sustainable over a long period of time. It really isn't. Over that short period of time, with that kind of short burst that you see, people make a lot of money. A lot of times it really doesn't end well.
So in terms of the sustainability of the trend itself, maybe not necessarily the heightened price of the stocks that are falling under it, do you think as we move further away from the COVID-19 pandemic, stimulus checks are not coming anymore in the US and people are facing the reality of things? Is the meme stock trend one that we'll see continue for a while, or is it really already starting to fizzle out?
I think it remains to be seen, right? It's kind of fizzled out already. As a matter of fact, a basket of about 37 meme stocks that a Bloomberg index tracks is down 40%, over the past year or so. I think the key issue really is about the fact that we're seeing an emergence of retail investors in the market. And this meme stock phenomenon is usually driven and fueled, by retail investors. Also, the democratization of investment through, investment platforms like Robinhood and Co. Has essentially created a situation where retail investors are basically here to stay. Truth of the matter is that they obviously are not as sophisticated, not probably as enlightened as HNIs or high net institutional investors. But I think that they are here to stay. Just before the COVID pandemic, retail investors accounted for just under 10% of total investments. Today, they account for almost 25%. And that actually continues to grow, particularly with the proliferation of these online platforms that allow you to trade these stocks. So the retail investor trend is certainly here to stay. Whether the meme stock phenomenon becomes sustainable really remains to be seen. I doubt that is going to happen. I doubt that it will be sustainable. We're going to see flashes of movements, buzzes and hypes around meme stocks every now and then, but I don't think that it's a phenomenon that has come to stay.
So I have to ask this because you mentioned this word twice, 2 times at least, the democratization of stock markets, of people being involved, the rise of this retail investor as well. When you look at it, as you said, a lot of everyday people have felt completely locked out of the stock market. They watch the numbers rise and fall. They see trillions and billions and millions of dollars. And then, of course, they sometimes feel the impact later on in their own pockets because of the movement of the stock market. Is the market really taking notice of that? Because that's also where you've seen the rise in the cryptocurrency markets as well. It's taking the power away from the traditional sort of finance players and putting a lot more power into the hands of individuals. So is that something the market really is paying attention to? That people want to take part, and if you don't give them their way, they'll find a corner.
Oh, absolutely. The market has taken note of that. As a matter of fact, the SEC chair, Gary Gensler, US SEC chair, has come out to talk about, the meme stock phenomenon. And in fact, there are some investigations that are already open now into the whole GameStop situation. But critically, even more regulation for a lot of these retail platforms in terms of their pricing, in terms of their fees, because they really promise no fees, right? So there's some investigation going on there to get a sense of how things work there. Again, the idea is to ensure that, investors are largely, protected. So you're seeing a lot more platforms, even here in Nigeria, where, platforms offer you access to US stocks. So in the US, there's a proliferation of platforms. So I think that phenomenon that has continue to encourage the participation of retail investors or unlocks, the potential of retail investors into the market has come to stay. Recall that a sizable chunk of wealth in the US sits in the stock market. And like you rightly mentioned, a lot of the retail investors, moms and pops, have felt left out of that wealth creation machine. So these platforms offer a way through which they can grow, their wealth in the stock market. Particularly, if you look at the last bull run that we had, that was for over a decade. People are looking to get in on the action, and I think these retail platforms provide opportunity for them to do that.
All right, so very quickly, I have 2 more questions that I must ask. So we talk about this retail investor, and we've also mentioned the platforms that make it possible for Nigerians, Kenyans, South Africans, and Africans across the continent to now invest in the U.S. markets as well, which seems to be the one everybody has their eye on. But in relation to the meme stock, coming back to that now, if somebody wants to jump on this trend, and because we know we're in chat rooms, everybody's seeing what Reddit is saying and all that, what would you say to them? 3 tips, 3 things to look out for anybody who really thinks they quickly want to make that money and jump out of this meme situation.
So I'll first of all say that the stock market is not a get-rich-quick scheme. Secondly, be careful. Thirdly, be careful, really. You just have to be careful. You know, you don't want to be left holding the bag at the end of the day. It most times doesn't end well. You know, if you're going to go into the stock market, you need to do your research. You need to pick stocks that, you know, show value now and in the future based on the research that you have done, not on the back of some frenzied speculation. Yes, people make money in the short run, but it almost always doesn't end well.
And so finally, Victor, this is something we've seen largely in foreign stock markets, particularly in the U.S. Could we ever see this kind of meme trend, meme stock trend rise up in African markets?
It is possible. You know, it is possible for that to happen because the sort of technology and the platforms that have given rise to what we've seen in developed markets, we have here basically. We have those online platforms here as well. We have platforms that allow people to invest as retail investors directly in the stock market. However, I think the depth of the market and the liquidity remains a challenge. The US stock market is very, very deep and extremely liquid, and it allows for those sort of wild movements. It allows for as many investors as possible to come in and play. Our markets are not that liquid and not that deep yet. But I think that as they become more liquid, as they become deeper, the potentials for that to happen are certainly very, very, very possible.
All right, Victor Aluyi, thank you so much. A very fascinating conversation on something I think many of us can relate to, and we'll definitely see you sometime soon.
All right.
So the takeaway from that conversation is be careful, be careful, be careful. It is a trend that many are jumping on, but do your own homework and be sure of what you're getting involved in. Coming up next is NC4 to watch as we wrap things up. And here are a few stories we're tracking as we wrap things up on this episode of Business Edge. South African lawmakers have approved a new design for coins that will feature inscriptions in all official languages. The languages have been rotated annually for the past 10 years, and this is the fourth time South Africa will be changing the design of its coin, the last one being done in 1989. Kenya Power has ended prospects of commercial banks and other third-party payment service providers of renegotiating new contracts to sell prepaid electricity tokens, but contracts with telcos still stand. Investigations by the utility firm reveal that fraudulent activities of a cartel, which uses a web of unidentified mobile numbers to target unsuspecting customers through WhatsApp, Telegram, and Facebook, was a problem. The Egyptian cabinet has approved a contract with Germany's Siemens for the execution of the Lot 3 package of the Energy Efficiency Enhancement Project, financed by the Japan International Corporation Agency. The project will be launched in the area served by 3 companies, particularly the electricity distribution companies. And finally, the Export Council for Building Materials, Refractory and Metallurgy Industries says that the Egyptian exports of copper and brass work surged by 47% year on year to $218 million during the first half of 2022 from $148 million. A great way to end the week with some conversations on meme stocks and, of course, looking at the Competition Commission in South Africa and a new tax treaty that's coming from Kenya and China. If you've missed any of our conversations in the past week that have focused on African business, the economy, and finance, head to YouTube. We are there. You can subscribe to our channel, follow us on social media at News Central TV, and, of course, download our mobile app as well. I hope you have a fantastic weekend, and I'll see you 11 a.m. West African time on Monday, and hopefully we'll start another profitable week. I'm Tolulope Adeleru-Balogun. Up next, 12 p.m. West African time, News Central Now with the latest from here on the continent.